Yo, what's going on, guys? Welcome back to another video. This video is going to be on sessions and how I use session opens as a confirmation for my personal trading, and yeah, how we can use these different sessions to our benefit. So obviously there's three different sessions. We have the Asia session being the first one, we have London session being the second, and the New York session being the third. And obviously the different timings for it, you can find that on Google. Let's just search it up. Forex session times, right? You can go here. So Asia session is 11 p.m. So this is GMT, 11 p.m. to 8 a.m. European session, which is London, is 7 a.m. to 4 p.m. And then North America session, which is New York, which is noon. I think that's like 12 to 8 p.m. Right? So these are all the different like session times. Obviously, it varies between whatever time zone you're in. But if you guys want this session indicator that I use, just go to indicators and type in sessions on chart. And this is the one that I use. It's called Orox. He made it. Really good indicator. These are my settings. We have Asia as blue, London as green, and then New York. I have nothing for New York because it's so much easier to tell that, okay, this is New York, and etc. So the question comes, how do we actually use sessions to our like benefits? How do I actually understand sessions and all this stuff? Well, this is the video that you guys have been waiting for, and don't worry, I got you. So let's go to right here. So overall structure on EJ, we can see on the 1 hour is definitely bullish, right? We haven't really seen nothing crazy happening. We still have our swing point highs and lows marked. Boom, 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 and potentially boom, right? So we do have our swing point highs and lows marked. So overall, we are bullish. Now, the way I view sessions is by mapping out liquidity. So to me, we see London session over here. Okay, no, let me start from here. So we see London session, New York, and Asia created a ton of liquidity right here. Created all this liquidity that we know that the market is going to have to come back down to. That's weird, sorry about that. But we know that the market is eventually going to have to come back down and take it out, right? Now, each session, it has its own like different objective. For example, right here, people say that, okay, Asia session is known for consolidation, London is known for breakout. That's not entirely true. Rather, it's about the market cycle. And by the way, with sessions, it varies on different pairs. If you're going to be if you're going to be trading London session, then you're going to have to be trading London pairs. For example, Euro USD, Euro JPY, GBP USD. And if you want to trade New York session, you're going to have to be trading Euro USD, USD pairs such as USD CAD, USD JPY, USD CHF. And if you want to trade Asia session, trade Asian pairs such as USD JPY. I think CAD CHF is one. Or no, that's more like, yeah, you can trade CAD CHF. There's a bunch, like, it makes sense, you know, like just trade the pair that makes a sense, that lines up with the session. So each session has its own objective, but the institutional market cycle owns what the session is going to do. So for example, institutional market cycle, we can say Asia session right over here, it basically had its expansion. Why did Asia expand if Asia is known for consolidation? Well, it's because it has objectives of where the market wants to go. Asia pushed up and then London consolidated. Why did London consolidate if London is supposed to be the one that goes up and Asia is the one that's supposed to consolidate? Well, it's because the market can't continue to expand. After an expansion, you're either followed by a retracement or you're followed by a consolidation. In this case, we're followed by a consolidation. Now, after that consolidation, we had another re-expansion back up right over here. Now, after that expansion, obviously, we know that the market can't continue to go higher. It has to consolidate or it has to retrace. In this case, wrong thing, my bad. In this case, it consolidated and then the market created liquidity. Now, what we're going to be doing is we're mapping out where the liquidity is now. We know that there's liquidity resting below here, long term, that the market's going to have to take out, which we'll get into later on, and liquidity that the market has that's resting over here that Asia session already took out. So let's go down to the 15-minute. Asia knew that there's liquidity over here it has to take out, right? Because London session, Asia session, New York session, and Asia session, once again, it generated so much liquidity. So as soon as London opened, it pushed down to grab that LQ. Now, this is where scalpers go crazy. They're on the 1 minute time frame, buying, selling. I don't do that. I just like to stick to whatever is more clear. So I'm just on the 4H time frame at this point. I'm just looking at what the market is overall doing. So on the market overall, if we go to replay mode just over here, I'm looking at this area at like the 30-minute. Look at how clean this is. London session goes down to clear the liquidity of Asia, London, New York range. But what happens is it creates more liquidity once again just from here. We created liquidity of London, London, and London. So now we know that overall long term, we don't know when. It could be today, tomorrow, who knows when. But we know that the market has to come back down and take out that money. So we can assume that the next few sessions, they may consolidate, do something like this. My bad. Well, we know that the next few sessions, they could do something like this and come back down to take out that money that rests below. But we don't know what's going to happen unless we play out what the sessions are going to do. So let's let it do this thing, and then boom. So London creates its high point right over here. We have our London high. This is where London high, and then the market goes down. Now when the market goes down, what did we do? Well, once again, we just generated more liquidity right over here. We created more liquidity. What is this telling you? All these sessions they're telling you a story. They're telling you that the market wants to go down to take out the lows right over here and right over here. So you already know that even though Asia session is known for its consolidation, why is Asia session going down right now? Why is it selling off? Why isn't London selling off? Why isn't Asia session doing like random stuff, like moving sideways? It's because there's liquidity in Asia, and London and New York. They all have their own objectives of what they want to do. Asia knows that, okay, there's liquidity resting below here. I'm just going to create liquidity, so when London session opens, my friend London, he's going to go push the price down and grab that liquidity. My job is just to create liquidity. Right over here, London created liquidity, London created liquidity, London created liquidity. Most likely, London's going to come back down here to take out that liquidity because there's so much money resting below here, obviously. And let's play this out, and that's exactly what ended up happening. London opens, and London is known for its manipulation. As soon as London opens, it always manipulates. The market always goes down. Even though if London is bullish, it's going to go down at first, and then it's going to reverse. Good example right here. London sells off. People see this break of structure, and they start selling over here, and then they get stopped out. So make sure that you know London, the first few hours of London, there is always known for its manipulation. It goes down to make you think that London sells, and then when London does finally sell off, it eventually just goes up to manipulate everyone out. So now we know that the London session took out money. London session took liquidity out. If London session took liquidity out, right? London session took liquidity, just like how order blocks. If an OB takes and sweeps liquidity, that OB is much more stronger, correct? If the London session moved down, sweeps liquidity, and then after it's followed by an expansion, it's followed by a proper real expansion, then that move is known as your, a really strong move that could potentially be your area of interest. But for that to happen, we need to see a proper break of structure happen, right? So boom, right over here, what do we see? We finally see that break of structure right over here. So now that we know that London swept liquidity over here, our major area of interest is going to be this expansion, because London swept liquidity of the lows and it moved up and gave us a break of structure. So I'm going to delete all this now. We have a break of structure right here. Mark this up. Boom. So now that we know our overall area of interest is going to be London down over here. As soon as price comes down, we know price is going to have to come back down here because that's the algorithm. The market swept liquidity here, so most likely it's going to come back down to retest that area, and then it's going to go up. So at this point, all I would do, let's actually check the 4-hour time frame to get a better idea. So there's liquidity being generated, market swept that liquidity and then expanded. So at this point, we would just wait for price to come back down. Now look at this. Like I said, remember how I said every single session has its own objective? So Asia knows that, okay, London swept the liquidity of the long-term higher time frame lows, and we overall know we're moving bullish. Asia's like, okay, fine. Because we've swept the liquidity of the lows, it's time for me to sell off, because I know I have to rebalance price in order to retest this area of interest, which was my OB, higher time frame, to go higher, correct? Now, notice how there's liquidity chilling over here as well. Asia knows that overall long term the market's gonna have to come back down to retest its overall expansion. So it creates liquidity long term for it to come back and pick up. And now right over here, Asia's selling off because it needs to rebalance price for it to come lower. So let's play this out. Let's go down to like the 1 hour time frame. And my overall area of interest at this point would just be this last down candle before they move up. And the reason I'm using this entire zone is because it is a pretty wicky zone. Like there's more wick than candle, and obviously you can go down to like 45 and refine this up to here, which is perfectly fine. So let's go down to like the 1 hour and let's do our thing. Let's see what the market does. And at this point, once you set your area of interest, that's all that matters. That's it. Just wait for price to come there now. It's going to do stuff like this. It's going to manipulate you a lot. Literally just wait for price to come to your area of interest. The only time your area of interest is not valid anymore is if price did something like this. If it broke past your area of interest, 1, it's not valid. 2, if the market starts breaking newer highs, for example, our current high is right over here, right? If the market breaks past this current high, then most likely this area of interest is invalid unless the market did something like this. It consolidated, generated a ton of liquidity, and then it broke above. Then we know long term it's going to have to come back down. So other than that, stick to what the higher time frame is telling you. And in my opinion, this is the higher time frame. We had this range being created. London opened, took out the lows, and then it went up and gave us a break of structure. So let's play this out. Let's see what the market does. And boom. Notice, I hope you guys really noticed that. What did London do? What did Asia do? What did all these sessions do? All these sessions, they knew that, okay, they came in the basement together, right? They came in the basement. They said, okay, look, London, let's manipulate this guy. Let's create a range of support and resistance, but let's make it seem like we're going to continue going up. Let's not make it seem like it's a range, but at the same time, let's just manipulate them. For example, right here, London creates a range. Support, 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 support. Range. Resistance, 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 resistance. You see that range that's happening now? You have to keep your eye open. So London, New York, and Asia, they're all working together. They have their own objectives of what they want to do. So when you have your point of interest, don't just set and forget. Rather, look at what price is doing. We know that it's just creating liquidity for the market to come back and pick up later on. Something like that, right? So yeah, London, sorry about that. So London over here created liquidity. Asia created liquidity. London created liquidity. Asia, New York, all these sessions they're creating liquidity because they know they want to use this area that we marked up. But the reason they're creating liquidity is because they don't want everyone to enter at this level. If every single smart money trader, every single trader in the world knew that about liquidity concept and the session confirmation thing, then no one's going to be entering over here. The thing is that everyone doesn't know about this. Only a handful amount of people know about this. So therefore, that's why retail traders are buying this. And they're just creating liquidity long term for the market to come pick up. And right over here, right, we can see that liquidity clear top. We just added more liquidity at the highs for the market to come back long term and pick up. Correct? So our area of interest is still valid unless we break above this area right here with momentum. So, and then boom, look at this. What did Asia do? Asia said, okay, let's go back to London actually. London said, okay, look, I'm getting ready to go down, but I can't push the price all the way back down now because my session is about to end. London will never, ever, 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 ever just randomly sell off the last few minutes. Like, look at that. If it just sold off, that's 60 pips it sell off in the last few seconds of the session left, or last few minutes. It won't do that unless there's news. New York said, okay, I'm just going to, be a bitch. I'm just going to do whatever. Like, New York does whatever it's want, whatever. And then Asia comes in. So we know that if London didn't do anything and New York didn't do anything, then we know Asia's going to have to do something because overall, there's liquidity chilling over here and the market has to take it out. It has to. Like, it literally has to. It always has to. So Asia opens and Asia sells off. It sells off and it taps into your area of interest. And look at this, from here it automatically pushes up. But then someone says, okay, wait, I don't want to enter on Asia because Asia doesn't give proper entries. Like, it's just weird and consolidated. I'm trying to show you guys that that's not completely true, right? You can enter at Asia session, but make sure that the cycle is correct. The cycle matches up where the liquidity is. But for the sake of for your mind and psychology, if you guys don't want to enter Asia, no problem, we'll enter on London. So 15-minute time frame. Let's go back to right over here. So Asia opens. Let's say we didn't have an entry over here. Let's just say we never entered there. London session opens right away. Now, do we have any bullish structure forming here? Let's see. Not yet. Now we do, because look at this. We had a low, lower high, low, lower high, low, higher high. Market broke structure right over here. So now that we broke structure above, indicating that there's bullish structure now, what are we going to do? Well, obviously, we're going to be highlighting that expansion move that was the cause of this major BOS. And you can technically see the expansion started from here up to here. So where is our point of interest going to be? Now we have 3 potential points of interest, and this is where I would set limits for every single one. First point of interest being this one here. Second point of interest being this one here. And third extreme point of interest would be here, but I doubt price would even come near there, right? And boom. So the first one, if you did enter, you would have got stopped out. Now the second one, right over here, played out perfectly. So first one, you get stopped out, you're negative 1%, because we're still risking 1% each trade. And because this is 6 pips, we're able to use a bigger lot size. But at the end of the day, it's still about like 1%. And where are we targeting? Well, we're targeting the next level of liquidity, because now that the higher time frame sessions, they captured the liquidity of the lows, now the sessions change their objective. Their objective is now to target the highs of the liquidity. They said, okay, Asia and London said, okay, we took the liquidity of the lows. Now our plan is to go take liquidity of the highs. So let this play out. And then boom, look how quickly that moved up and smacked 73 pips as a 12-to-1. That's perfect, right? And then now they have different objectives of what they want to do and how they want to do it. So this was a really, really, really good informative video of session opens and how I use it as a confirmation. Make sure you guys aren't just entering randomly on London session, New York session. You have to stick to the higher time frame and also understand that the institutional market cycle and how liquidity is being generated and made. So if you guys have any questions, please watch the video once again. If you guys made notes, you guys are the best. If you haven't, start making notes. But anyways, have a good one and take care.